Joining me right now on set, our very own Christina Parsonevelis. We also have Kingsview Asset Management Chief Investment Officer Scott Martin. Good to see both you guys. I believe, do we have Paul Dietrich with us too? Another investor. He's joining. There we go. There you go. I knew you were around there, Paul. I'm going to start with you. The wild market. Is this the way of the future right now, or is this just a little blip?
What this is this is a reversion to mean normalizing correction. One of the things that's happened over this past, actually more than a year, is that you've had 5 big tech stocks that have dominated the performance. As of the end of August, they represented 47% of the performance of the S&P 500. And what we've seen basically really for the last month or so is the tech stocks have been going down, and they're reverting to mean of a more normalized stock market trend. They're very, very high in PEs, and so I see this as a very healthy correction in that, you know, the tech stocks are coming back in line with the rest of the 495 stocks in the S&P 500.
Christina?
I think we can't just solely focus on tech. If you look yesterday, I was on the New York Stock Exchange, 2:43 p.m. Just the intraday volume dropped so much that we haven't seen a drop like that in 8 years since the flash crash. So I think that based off the traders I was speaking to, volatility is going to continue to be an issue. Earnings started today. JP Morgan's supposed to be good right now. Their revenue climbed higher, up, 24% for the quarter, the third quarter. Profits up 24%. And yet you're seeing that stock down today, which you would expect it to be better. Like Deirdre brought up, the guidance is concerning. So I think going into the earnings season, looking into the future, we're going to be paying close attention to the guidance of a lot of these companies.
Well, you know, right now, earnings seem actually, Scott, pretty good, right? I mean, so far, so good. We've got strong economic fundamentals. I do wonder if some people are saying to themselves, wait a second, you know what? I can make a little more money on that CD at the local bank because Treasury yields are going up, interest rates are going up. And so is this a bit of a rotation as well in that people now have more opportunity in the investment landscape?
It could be. Now, gosh, I hope that mom and pop sitting at home aren't thinking about that, 2% or 2.5% CD just yet, Trish, because
well,
I think...
you know that I'm using that to characterize something broader,
sure.
Right? Which is that investors are saying to themselves, okay, I have more optionality. It used to be equities were the only game in town. Well, maybe I can put a little money in fixed income now.
Fair play, right, exactly. Maybe the 10-year bond. And so you're right. That's providing an alternative. And I think to the point that K-Parts made was visibility is in question here. I get it that earnings are good. In fact, I think the bar, at least psychologically, based on some of the pre-announcements, has been lowered. So that's good. But the visibility's cloudy. I mean, you look at the incidents surrounding tariffs. GDP, obviously, going forward looks strong. But then the job market is kind of maybe leveling off here. I mean, still growing, but not growing at the higher rates that we saw earlier this year.
Is that enough to cause you to just say, throw in the towel and go?
What it could do, though, here's the thing. In a highly psychological market, as Paul mentioned, this is a market, Trish, that could take that as a reason to sell first and ask questions later. And that's the story of, say, certainly yesterday and the day before.
How's the Fed factor into all this, Paul? By the way, the president's not too happy with the Fed right now. Most presidents don't really like the Fed.
Yeah, exactly.
Maybe Obama did.
Let's face it,
anyway.
This is an election year, and President Trump is really promoting the state of the U.S. economy, which is really good, and it's firing on all cylinders. And so when you see a stock market correction like we've seen over the last few days, he has to blame someone, and so he's blaming the Federal Reserve. I think this is normal. This is politics. But
dangerous.
By the way, no, it's not dangerous. Only if the Fed actually listened. But, Scott, I'm going to give Jay Powell a little more credit than that.
Oh, Jay Powell has actually come out in a broadcast interview with NPR Marketplace saying that he's going to follow through with this. He's said that he's going to stick to the facts and what the economy is showing, not a political play. And it shouldn't be a political play.
Absolutely.
You've had presidents that have been very critical of the monetary policy. But in this case, look at where interest rates are now. Look at it historically. They've been very, very low. The economy is growing. Yes, we had inflation come in at 2.3%, but we have a very, very tight labor force. You have Walgreens saying that they're going to increase their salaries, Amazon announcing that $15 per hour. So there's possibly this inflation fear right now.
We were talking to the gentleman, the founder, Jerry Fine of Oaktree Asset Management just the other day. And one thing that he mentioned was that a lot of the companies he speaks to regularly are starting to say, places like Walmart, for example, that inflation's running a little higher than what you might think, that wages are growing faster than 2.8%, and their production costs are increasing. And so the Fed needs to take all that into account in that, Christina, their job is to make sure that things don't get too overheated, right? Because then you get problems down the road. But it's a tightrope that they gotta watch.
It's a very difficult position for Jay Powell to be in, but I think also we should preface that there's two different kinds of inflation. You also have man-made inflation when you have the tariffs come into play. So the fact that literally 50% of all Chinese goods that enter the United States at this moment are being taxed, and potentially could be all 100%. That inevitably will have an effect on companies, on us.
Yeah, no, I get you. I hear you. But, Scott, I think that that's kind of a short-term play. How are you thinking about China right now? And you've heard me say, if we don't start dealing with this and the theft of intellectual property to the tune of $600 billion a year, if we don't deal with it now, it's going to be a whole lot harder to deal with it in the future.
I agree. To your question, how's China? I don't know. Look at their stock market. It's absolutely blasted. No, not good. So you're right. That probably brings them to the table because honestly, Trish, before this tariff talk really heated up, I mean, if you go back even to last year, there were problems under the surface in China anyway, economically. So now this is really starting to hurt them. Your point with Christina is good about inflation because if you look at material costs, guys, those are dropping by and large around the world. It's not that hard to produce things anymore. There's a lot of price competitiveness there other than oil that we've seen bump up recently. So to me, the inflation story is all about wages, and it's nowhere.
All right. So, Scott, you buying right now, or you're going to sit by the sidelines and wait this one
out? Sit by the fire and maybe have a cigar and think about it. But I will be buying probably next week. I think you got to let the psychological kind of wash out here, though.
Paul, your thoughts. Final thoughts.
Or maybe this morning, right.
The story that nobody's talking about with inflation, because inflation has been a problem in the past, and we've only seen for the last 60 years bad inflation, where the government spends too much and then has to print money. That causes inflation. But there's also good inflation. When wages are going up and prices are going up because people can price in the costs, that creates a virtuous circle.
Hey, listen,
and the government doesn't have to print money.
It's natural.
Right. And listen, you don't want to have to fight deflation. That's a whole other can of worms that's incredible.
Can't win that fight.
Yeah. Now, it's good to see you guys. Thank you, Christina, Paul, Scott.